This is brought to you by John Daniel and Partners LLP.
Welcome to today's webinar. My name is Frida Babu. I work in John Daniel and Partners LLP. So the topic for today is how can SMEs navigate financial management challenges? On our day-to-day activities as SMEs, we are likely to encounter challenges that are related to financial management, and we want to delve deeper into understanding how we can overcome such challenges. Our speaker for today is John Dombe. He's a financial expert and he works here at John Daniel and Partners LLP. John, if you can hear me, kindly welcome. Thank you.
Hi, Frida and everyone. I hope you're all well. But before we begin, maybe Frida, you can confirm if the voice is audible, please.
Yes, John,
Frida,
we are
please.
able to hear you.
Okay, thank you. To begin with, I'm John Tombe. Like Frida has just introduced me. And today we'll be having a discussion about how SMEs can be able to navigate the financial management challenges, which are very common in these small and medium-sized businesses. That's what we want to discuss today. So feel welcome as we try to share some nuggets on how we can be able to weather such challenges even as we run our businesses. So we want to begin by understanding what SMEs are and appreciating their role in our economy. And SMEs in Kenya, they are about 7.41 million. And that means they represent around 98% of the businesses. And they also contribute about 35 to 50% of the GDP. And that is a survey that was done by the Kenya National Bureau of Statistics way back in 2019. And that tells you the critical contribution, the significant contribution that SMEs do into our economy. So the other bit is on the jobs. We are aware that the government has made a lot of efforts in trying to create more employment to people. And SMEs are marked as great players in this field of providing job opportunities, mostly for the young people, for the young population. And currently, according to this particular report by Phyllis Wakiaga from around 2018, SMEs generate around 30% of the annual jobs that we get in Kenya annually. And just recently, I think a week ago, the president and the CS for Treasury, they launched the Kenya's fourth medium-term plan, which is geared into achieving the Vision 2030, which aims to making Kenya a middle-income country by 2030. And part of the key drivers that will help Kenya achieve this Vision 2030 are the SMEs. So SMEs are very critical. So we do not have to look at ourselves if we're in the SME space. like our contribution is insignificant into the economy. So our presentation basically will touch the following areas. We'll try to understand what financial management entails. We'll also see the importance of this particular area of financial management into our businesses. And then we'll look at the challenges that are normally faced by SMEs, which are linked to financial management. And after we have seen, we have looked at the challenges, now we can try to look at the practical ways on how businesses and business owners can be able to navigate these challenges. And we'll cap it up with a real life case study before we conclude. So jumping into what financial management is, we have scholars in this field. One is Brigham, Eugene, and Michael, and that they describe financial management as the act of planning, directing, monitoring, and organizing, as well as controlling the monetary resources of an organization. And in that definition, we get that the act of managing finances, you will have to deal with how you can optimize the financial performance of your organization on the various aspects, may it be the expenses, the profits, the cash you are handling, and also how you are handling the credit. That may include the loans you are taking and how you are servicing the loans. And in doing all that, you ensure that your organization is sustainable, and at the same time, you are maximizing the value you are getting from those limited resources. We know that SMEs mostly they face one big, I think one of the biggest challenges to SMEs is the limited resources. So business owners or those people who are dealing in SME space, bearing in mind that they have to figure out how to overcome that challenge of limited resources, they have to very efficiently manage whatever they are having so that they can get value. And financial management is very important, both at a personal level, because we know SMEs, they are run mostly by the business owners, mostly. That's where they begin. And maybe they are scaled up now to have management systems where now we can have the different cadres, the different departments, but they begin from the owner. So besides the owner, we have the business. So why is financial management important? Number one, if we want to run a very competitive business from wherever we work in, or from whichever industry we may choose to start a business in, we have to figure out how we can make that business competitive, because there are other people who are also taking part in that business in the same industry that you want to venture in. Number two, we want our businesses to grow. We want our businesses to grow, and we cannot grow them. We cannot make our businesses to grow if we are not managing this aspect of financial management, because financial management is part of the fuel that takes the businesses forward. And then when now we have made our businesses competitive from the word go, then we ensure they are growing by being efficient and effective in how we manage the finances. That dictates if the business will be sustainable or it will collapse maybe in the next few years. Research in Kenya shows that most SMEs go under before they actually celebrate their third or fourth birthday. So financial management is very key in determining if the business is going to be sustainable, both in the long term and in the long term. And financial management challenges, there are several. There are several in SMEs, just like we have seen before. And when we talk about financial challenges, we mean difficulties. There are obstacles or issues that businesses face when trying to optimize their financial performance, so that, like we have seen in the previous slide, they can remain stable and sustainable even as they try to achieve the financial goals that they have already set. So one of the key area of financial management is financial planning. And we are going to join that with budgeting because they go hand in hand. Financial planning is very essential to any business because this is where you decide what you need to achieve, both in the short term and in the long run. And now aligning that with the finances that you have, the investments you want to make, the expenses you plan to incur, aligning that with your strategic goal, where you want to go as an organization. So it involves looking inwards to an organization, to a business. You look at the weaknesses, the strengths. You can look at even at the industry trends. So from there now you can be able to plan as a business, as an SME, how are you going now to move forward? And it involves a lot of stuff that you need to consider. You may want to consider about regulations, whether there are tax laws that maybe will affect your cash flows or how you operate and such like stuff. Now, budgeting will now help you to achieve those goals that you set in your financial plans in the short term, maybe within a fiscal year or so. So you may need to now have a detailed plan on how you are going to cater for the expenses. Of course, from the revenues that you're going to make or the incomes, as even you try to meet the operational needs of your small business. And by doing that, you may face a lot of challenges because much as financial planning and budgeting is very key, you may face some hindrances towards achieving that particular item in line with financial management. And one is inadequate financial expertise. Most SMEs, they may not have the financial expertise on how to do a very good financial plan for their SMEs. Sometimes they want to do that. They are aware that they need to make such plans, but they have inadequate tools, or maybe they are using manual ways to, to capture the plans. Sometimes they want to make very good plans, but they are not able to manage their overheads, whether they are salaries, their rents, their utility expenses. They are not really able to capture that on the go so that they can have a very good plan on how to handle that going forward. The other challenge is risk management. Risk management for SMEs is a huge component that we'll see later in some slide that we need to think about, because due to many challenges that SMEs face, they are not at times able to capture and quantify the risks that their businesses may face over time. And this may include even credit risk relating to maybe they are looking for loans to fund their businesses. There are some market risks which are external to the business. Maybe, for example, the currency is losing its value and affecting the commodity prices. There are other operational risks which are inherent to that business. Sorry. For example, the processes, the people that work within that organization, the systems they are using. So there are several risks that are associated with the SME in that now when they want to do the financial planning and budgeting, maybe they are not very accurate. And sometimes most SMEs, like we have seen when we are starting, they begin from a very low level, mostly from one person growing 2 people, 3 people, and even having tens of employees. And maybe there are times that they may need even to open another branch, for example. So managing that growth and expansion, sometimes it's a bit challenge. It's a bit of it's quite of a challenge to most of SMEs. And that, like we'll see, will affect even their cash flows and how the business as a whole is sustainable. That is one of the challenge. The other challenge is on the cash flows and how they can manage them. SMEs mostly deal with people or customers and clients that sometimes may not be able to pay upfront or when the cash is needed. SMEs find themselves in some space where maybe they sell things on credit, and this really affects their cash flows. So their inflows and outflows at times have some mismatch, and this leads to their liquidity. And as such, they are not able to meet their financial obligations, whether they want maybe the rent is due due to some inflows and outflows balance. An SME or a business owner may not be able to honor those obligations. Maybe there is a loan that you want to repay, and maybe due to how the cash is coming in and how you are using it, you are not able to honor those obligations. And there are several challenges that lead to that. One is the irregular cash flows as a result of seasonal revenue fluctuations. Most SMEs deal with commodities or services that maybe they are seasonal. If, for example, a business owner has a small bakery, for example, there are seasons that revenues will be more. There are seasons that revenues will be a bit low, and such irregularity in terms of the cash flows may mean a huge impediment on how they can do their financial management. The other one is late payment by customers, like I've seen. Sometimes SMEs, they are not able to manage the overheads, and that affects how they manage this issue of financial management. Sometimes inventory management is a big issue to SMEs. The example I've given about a bakery, maybe a baker needs flour, baking flour of a certain quantity for a certain day or a certain week. But due maybe to some anticipated price hikes of these particular ingredients or raw materials, maybe they decide to buy in bulk. And as such, some cash is tied to that kind of inventory, which may not be needed in the next few days. So that cash maybe would have been used to pay salary or pay electricity bills or pay even internet expenses. But now you have tied that cash into the inventory that you may not be needing in the next few days. So inventory management is another key area. Sometimes you may face uneven payment intervals from your suppliers. So that eats into your cash, and cash management becomes quite of a challenge. SMEs only also may operate in a space where we don't provide for emergencies. Giving the example I've given about a baker, there is maybe a very critical machine that we use to bake breads or cakes, and we don't have a plan or an emergency plan. If that machine fails today, how are we going to fix the problem? Or what are we going to do? Are we going to stop operations? So if we don't have a provision for such emergencies or some other unexpected expenses, we may find ourselves maybe borrowing very expensive loans to try to fix that problem. The other issue with cash flow management is balancing the short-term and the long-term goals. So sometimes long-term goals, they are capital intensive, and you may use all the cash that you have to invest into a long-term goal while forgetting the short-term needs of the organization. And you may run into cash flow problems, whereby now you have bought, let's say you bought an extra oven because you figure you may want to expand to open a new branch, but maybe the situation as it is not allowing for such. So the short-term needs of the business will be overlooked, and as such, you may run into cash flow challenges. The other challenge or the other issue, the other element of financial management is cost reduction. The cost reduction also can be looked hand in hand with cost management, and it relates to how we control and how we optimize the expenses we incur as we operate the business, because we want to maximize the profitability. We want to be efficient in our processes, on how we produce that service or that product. And while doing that, we want to be sustainable. We want to make that business sustainable. So we don't want the cost to be above the roof, because that means we will not be there tomorrow. If your costs, if your overheads surpass your revenues, we can only count your days when you will be in operation. So this is a key area that most SMEs find a challenge in, and most of the challenges associated with that include limited economies of scale. SMEs, they may not have that advantage of buying things in bulk because of the limited resources, so they may not enjoy the economies of scale. Sometimes the demands of the services and products that SMEs deal with, they are very irregular, and this may lead to, maybe if it's a bakery, it may lead to an overproduction of the products, the cakes, the breads, because you may not quite clearly predict the demand of the products you are producing. Sometimes this can also lead to underutilization of resources that the business has. So now that means that the costs, you are not perfectly in control of such costs. Sometimes internally in a business, we may have inefficient processes and operations. such that you may end up incurring a lot of expenses out of your inadequacies on how you process things, on how you do things. Sometimes we may depend so much on some key suppliers or customers, such that even when they hike prices of some commodities, if they're suppliers, we may not have an option at that point. So we are forced, we are the masses of such a supplier, sorry. Sometimes we are so much dependent on a particular customer or particular customers, maybe there are a number or a few, such that even when overheads have gone up, like right now, we understand that most of the commodities, the prices have gone up. If you have a specific number of clients or customers that you deal with, sometimes it becomes quite of a challenge to try to have them agree to a price hike of the commodities that you are selling. So, and that now means that you have to foot that cost. You will not pass that over to them, to those clients, because maybe they will complain, and maybe due to the relationship that you have built over time, you may not have the latitude to have them understand why you are increasing the price. SMEs also, we face a challenge on changing. Maybe there is something we need to change to optimize our operations, or even to cut costs. But maybe due to some reasons, we may fear that change, because sometimes it can be drastic. Sometimes we don't know what will happen later. So, and it's something that we need to look at, because maybe it's something that will cut costs, and when it cuts the cost now, it gives you more leverage in terms of the savings and the revenues to invest and grow the business more. So if we fear to do that change, we may remain stuck in a certain space for quite long. Moving quite fast, number 4 is financing and investment decisions. These are decisions that SMEs face quite frequently. One side is on the financing, how to source the capital, the monies that you need maybe to inject into the business to grow it, to expand it. And on the other hand, you want maybe to invest the profits, the incomes, maybe to something else, that maybe an income generating project, or even you may want to invest into, to do capital investment. Maybe you want to buy a new plant, a new device for your business. Maybe you want to buy an office space. Maybe you are just a consulting firm that is just beginning to operate. So you need to balance those two areas, the financing side and also the investment side. And the challenges associated with this include the limitation that you face in terms of the finances and how you access them. SMEs face one big challenge because we normally don't have the collaterals that most financing organizations request. And as such, we end up borrowing very expensive loans from maybe, for example, the microfinance institutions, from the Shylocks, and from other, sometimes they are called predatory financing options. So that is one of the challenge. Number 2, most of the SMEs deal with cash. If it is a bakery, the example that I've used, maybe we sell and we buy the ingredients. We sell the product and we buy the ingredients in cash. There is nowhere where we bank the cash. There is nowhere we are using, for example, the M-Pesa platforms. And as such, we are not building a credit history, maybe with a financial organization or a SACCO, so that we can be able to have that credit worthiness when we need that credit. So that at times limits SMEs when they need that extra funding from their own pockets, besides their own pockets. Sometimes small and medium enterprises, they are considered as riskier businesses or customers, and as such, banks
Hello,
and other
John.
financial institutions. Yes, please.
We can't get you clearly.
Okay. Allow me then to turn off my video to allow for a strong signal. Can you hear me now, please?
Yes.
Okay, thank you. Thank you, Frida. And sorry, members, for that hitch. I was explaining about financing and investment decisions, and there are different challenges that SMEs face while they are trying to handle the financing and investment decisions. And one of the challenges that we have looked at is the limited financial access. And this sometimes is brought about by their lack of credit history. Sometimes SMEs deal with cash and they don't have a relationship with any financial lender. So sometimes these financial lenders, they need collaterals that SMEs don't have. And SMEs, sometimes they are profiled as very risky enterprises. So financial institutions will hesitate to give them loans, or if they do, they use very high interest rates. The other bit is limited investment options, that is on the investment side. Sometimes due to the resources they have, which sometimes may be minimal, the choices on what they can invest on, they become very minimal or very limited. Most of small businesses and most of the small and medium-sized businesses, they are prone to focus more on the short term, and you can understand that because if we are talking about a fruit vendor, for example, in the space that they are operating in, they may want to focus on the expenses of the day and the profits of the day. They may not have the latitude of thinking about 2 years, 3 years from now, and that is a challenge because it becomes hard for them to decide on what, for example, to be the source of their finances if they want to expand. If they're not thinking maybe about expanding in the next 6 months or 1 year, they may not have such thoughts of deciding on the available financing options. And also, as SMEs, sometimes we are risk averse, we fear, and you can understand because of the environment that we operate in. So we fear what will happen when we venture out there, when we want to expand, when we want to, for example, do the electronic, for example, the electronic way of banking the cash instead of using the hard cash. There are such fears. And these ones now influence the decisions that we make in terms of both the financing and how we invest the profits. SMEs also face very complex regulatory environment. Sometimes you want to open a small restaurant or a small hotel in one of the 47 counties, and maybe there are several licenses that you need to have in place. There is a food and hygiene license, there is fire license, there is the trade license itself. There are several. And as such, you are not able to really figure out if all these expenses you are going to cater for them for that particular period. How are you now going to ensure that you have also sorted the other expenses that are directly linked to what you are doing, and also save some funds for the business. So these challenges are very key, and it needs us as SMEs to introspect and look at how maybe we can be able to overcome some of these challenges, like we'll see. The other bit on financial management is risk management. Like we have seen in our introductory slides, risk is inherent to any business. As long as you open any business, may it be small or large, there are some risks that are inherent, that are inbuilt to that business. And sometimes, some of the challenges that we face in this area, we lack awareness, or sometimes we can overlook some areas that are risky. Until something happens, it's the time that you realize you should have made some better plans. Sometimes we SMEs have fragmented risk management processes, such that if it's about a certain risk, we don't have a very clear communication or assigning of responsibilities to people, to different members of our teams, if something happens. And this fragmentation will bring about confusion when such a risk actually occurs. And as such, it poses a huge financial adverse effect to that business. Sometimes we depend so much on the owner, such that when the owner, for example, exits or faces some difficulty, or they are incapacitated to continue leading that small business, the business collapses. So this is why we are talking about, after now the business has begun to run, we may want to have systems to ensure that the business, much as it is a small business, we can have a way to make it sustainable even when the owner is not there. The other external environmental factors, like we have just observed about regulations and other natural disasters that SMEs or any other business needs to think about, so that they can have proper risk management plans. And nowadays, depending on the industry an SME may be venturing in, we have different compliance risks, and one of them is cybersecurity risks. Maybe you are dealing with, let's say, you are opening a cyber where people can opt in and do photocopies, scan documents, browse the internet, and you are handling people's data and information that you need to make sure that it is safe. So how are you handling the cyber security risks that are associated to that business? That is quite of a challenge that you may need to think about. Sometimes you may face supply chain risks. Maybe you are dealing with commodities that you source from different counties, you source from different suppliers. You can actually be importing some of the commodities or the ingredients. So when something happens to those areas, you may face challenges in keeping your business a going concern, because you may not be able to operate, especially if you are highly dependent on such supplies. The other important area on financial management is like regulatory compliance, and this one is very huge. And we understand the regulatory landscape has been evolving all along, and it is not going to stop, because there are different reasons why regulations come into place mostly to react to maybe to emerging trends. So as SMEs, we need to keep track of how we are complying with the different regulations, and they may include the industry-specific regulations. For example, if you are dealing in the hotel industry, there are some industry-specific regulations that are related to the hotel industry. If you are dealing with consultancy, you have a small consultancy firm, maybe there are regulations that deal with that, and even laws that deal with that. Sometimes there are tax laws that are very specific to you, the kind of business you are doing. You may want to understand and how you're supposed to comply. Labor laws are also very critical. If you are employing employees, if you have a number of employees, maybe on permanent, others on casual basis, you may want to understand what the labor laws say about how you should handle that. Sometimes you may be in an industry where environmental regulations are very strict. Maybe you are emitting some waste that maybe needs to be disposed in a certain way. You may want to understand how you are going to comply with that. And of course, compliance is very costly. Compliance is very costly because, like we have said on the licenses, all those licenses require you to cough some money for you to obtain them. So this cost of compliance sometimes is quite a challenge to SMEs. And finally, on this regulatory and compliance is on the privacy and security compliance. We have just discussed on one bit about if you're operating in a space where you handle specific or key and very essential details of clients, you may want to understand how are you going to comply with, for example, with the Data Protection Act that requires the data processors or the data handler. If you're handling any kind of information related to a person, how are you going to comply with that particular law? Technology is also another important aspect of any business. We cannot explain about this one, because it's a very critical component. If we want to make our businesses competitive, if we want to make our businesses sustainable, we have to be alive to the fact that technology will be what makes the difference. So for SMEs to be sustainable, we have to adopt the technology that is suited to what we are doing. And technology is good because among the many benefits that you can derive from adoption of technology is cutting costs. Sometimes technology also can help you to enhance your compliance to the regulatory requirements. For example, if you are dealing with, let me use the bakery, and you need maybe to be filing your returns. Do you have the right systems, accounting system, for example, that will ensure that you declare your finances the way they are supposed to be declared, such that you may not end up at loggerheads with the KRA. The other bit is sometimes businesses may want to adopt the new technologies, but the technology they want to implement in their businesses, it is very costly to implement. But like we learn in a short while, there are ways how we can slowly adopt the technology in all those areas slowly, such that it is not straining our finances, but it is also helping us to achieve more and also save the cost. Some technologies, like we shall see, they are scalable and very flexible. So you may want to begin at the low level and then scale upward slowly based on your financial capacity. And you may want to get over fear of adopting the new technologies. And we understand sometimes businesses, they want to adopt the technologies, whether it is on cash management like M-Pesa and the likes, but due to some other reasons, they may want to remain analog because of their own justified reasons. Now, how can we handle all those challenges that we have just seen on the 7 areas? One of the ways on how we can handle the financing challenge is looking for alternative financing options. And we said we need to, in financial planning and budgeting, we need to look inwards at our businesses and see where are we, where we want to be in the, both in the short term and in the long run, in the long term, so that we are able to determine which financing options are appropriate to what we are doing. Sometimes there are loans that are very friendly to our businesses. Maybe the loan terms, they are very friendly. The repayment period is very friendly to the business. Sometimes we can take advantage of government grants. Sometimes we can take advantages of their angel investors that want to invest into a business. There are also equity investors that can take interest into a business and inject some capital in the business. We can also take advantage of crowdfunding, where people join hands and they have a pool of resources and you are able to inject into a business. We can also take advantage of SACCOs. SACCOs may offer very good terms when you want credit. Their interest rates may be lower than the interest rates that banks normally have. So taking advantage of these financing options that are cheaper to the small business may mean an addition to the length maybe of the years that your business will be in existence. That means their sustainability. And may also mean you cutting costs, because you may not need to go for those very expensive loans, maybe from microfinance institutions or the silos. Number 2 is building relationship with banks, another credit lending organizations like SACCOs. And this means that you may want to transact with them, save with them, so that when you need credit, you are able now to have a very easy time requesting for such credit. Because without that, suppose you are dealing with cash only. When you want cash and you don't have any relationship with a lender, you will have very limited options, and that's where you end up into Shylocks. We as SMEs sometimes we face a challenge of not knowing what to do at different times or on different issues. It may be an issue of finances, how to do the budgeting, the plans, how to file a returns, for example, how to go about registering. Right now, we are talking about e-teams and the rest. Sometimes you don't have knowledge on how to do that. You can seek advice from experts, sometimes from mentors. You may be in an association in the industry you are operating in, and sometimes there are such provisions for assistance to fill in the gap you may be having in terms of the knowledge. We have seen the challenge about cash flows management. And one of the key contributor to that is how you handle your receivables. You have sold something to the customers and they are not paying in time, or you have not agreed, quite frankly, on when you should get the payment. So you may want to streamline that one so that you are able to receive the payments that the clients owe you in good time, so that your cash flows are not affected. And sometimes you may want to take advantage of the systems, maybe the accounting systems that normally have a feature of reminders to your clients if you're dealing with invoices. So when an invoice is due and the client is not paying, the system can remind the customers to remember to make the payment. If you are dealing with maybe manually, you're not using such a system, you can have strategy within your organization on how you quote unquote chase those people who owe you your business some money. Because when you do that, those efforts will be very critical in making sure that your cash flows they are at balance. Again, you can have a very robust way of doing the budgeting, because we have seen budgeting is very key when you are doing the financial planning. And budgeting is just like we do it for the personal finances. This year, maybe, or this month, these are the expenses that we anticipate to incur, and these are the revenues for this month. Now, this is how we are going to distribute the revenues that we have among the different expenses. Even for a business, that is very critical. And sometimes you may need to do it in a very formal manner. Maybe you can use an Excel sheet, an Excel worksheet to capture that, so that sometimes when you do it, I know some SMEs do it manually, maybe on a book. You write, these are my anticipated revenues for this month or for this year. These are my expenses that I expect to incur. And it's quite okay. Only that when you are growing up as a business, you may want now to scale that up and have proper systems that will really help you to have very robust budgets that you can rely on and review during the year or during the month, and be able to make adjustments as needed. The other important thing that we can do to make sure that we we weather the financial management challenges that we as SMEs we may be facing is doing a thorough market research maybe before we begin. Maybe you want to launch a new product. Maybe let me use the bakery example. Maybe you want to be baking a different kind of cake, or you want to be now serving a different client base. You may want to do a market research so that you can identify the different elements that characterize that kind of market. What are the trends? Will the people appreciate that product that you want to implement? How will they, how will they now view it? Is it according to the standards that the other players have set in the market? Sometimes you may want also to look at other cost-saving mechanisms in the line of your business. Maybe you are a barber shop, you are running a barber shop. What are the other cost-saving processes that you can be doing to make sure that you can cut unnecessary costs? What are other cost-saving opportunities that you can add to what you are doing, or you can take advantage of besides what you are doing to make sure that you reap more revenues? Businesses, like we said, they have one desire to grow. And when they are handling the growth, the expansion from just a very small business, a family-owned business, now you want to expand it and to employ more staff. Sometimes you may face that challenge of balancing that with the financial stability and the sustainability of that business. In that you may invest so much into achieving that strategy of expansion such that you overlook how are you going to sustain the growth? How are you going to sustain the stability of that business? And that now calls for a scaled expansion that should go in line with your financial capacity, and it should be well thought out right from the planning stage so that you don't end up in a space whereby you are strained of resources. Now you have to take very expensive loans to keep the business going even after expansion. And on risk management, it is very crucial for us SMEs to have a risk management plan on the most common risks that we face. And depending on the industry that we operate in, there are different insurance packages or products that we may consider maybe purchasing to protect our businesses against financial losses when unforeseen issues or events hit our businesses. And sometimes you don't realize the importance of having a risk management plan until when now something happens and you don't have an idea on how to overcome that. And mostly this has led to most SMEs to crumble, because now coming out of that huge loss after an unforeseen event has occurred to your small business, it becomes quite a challenge for you to overcome. So risk management plan is very important, and it can be very simple. It can be very simple. We are not talking about very complex risk management plans. We can talk about very simple and custom-made risk management plans, depending on the kind of business that you are operating in. If you are a baker running a small bakery, what are the risks that you anticipate may occur or may happen or is associated with that business. If you are running a cyber cafe, what are the risks? Are your machines maybe going to be stolen one day? Maybe that is something that you need to consider. What about a fire? If a fire breaks out in the business premise, and maybe you lose all your devices, all your computers, all your printers, how are you going to go beyond that event? So you may want to purchase maybe an insurance cover for that, so that it covers you on that rainy day. The other bit is on emergency kitty. I know this is quite of a challenge because most of SMEs maybe don't make so much in terms of the profits. They don't have the luxury of maybe putting aside so much for emergency purposes, but it is a very critical component for the continuity of the business and for the sustainability of the business. Because suppose if I'm a baker running that small bakery, something happens to my main machine that I use to bake, to my oven. If I didn't have an emergency kitty or a cash reserve to manage the emergencies, I'll be having problems trying to overcome that challenge. Maybe I may end up maybe using my own resources. Maybe I sell my personal items so that I can have money to buy a new oven or to have it checked or the issue rectified. So an emergency kitty is very important. And on compliance, we may want to keep ourselves updated on the trends, on the emerging regulations that are associated with where we operate and the industry we are in. And sometimes it goes beyond the industry. It touches on maybe all the businesses. Like for example, right now, if a small business has employees, there are some changes maybe to how you remit the NSSF deductions. There are some changes on the other statutory deductions, such as the housing levy. Right now, we are talking about the new policy about the NHIF. Such like things will be of interest to you as a business owner, because in one way or the other, they affect your finances, and maybe you may want to consider that when you are planning, maybe for the year. So it's very important to keep yourself updated. And maybe if something is not clear to you as a business owner or as a leader of the business, you may want to seek expert advice. Maybe from these organizations or from consultants, so that you are compliant. You are compliant with these regulations. The other bit is on having very robust internal controls and financial reporting systems to your organization. They may not be complex. They may not be sophisticated. You can keep them very simple, but they are very efficient and effective. So how do you make sure the processes that you are using within your organization, they are correct, and they assist you to keep things in check? How do you report your financials? You see, because this also will influence, for example, the taxes that you will pay, the taxes you will declare at the end of the year. So your internal controls, how do you handle the expenses? Do you record them somewhere? The revenues, how do you recognize them? How do you record them, because how you handle them, it will really influence how effective or how efficient your financial reports will be at the end of the year. And as such, compliance will not be an issue for you if you have very good reporting systems and robust internal control systems. The other bit is on technology. We have seen that most of the SMEs, they are risk averse, and they are also in fear sometimes to adopt the new technologies. But we cannot evade the fact that technology is here with us, and we need to find ways to keep tabs with the changes in technology. And one of the applications that ourselves we've been using is the zero accounting software, which is a very good software when it comes to budgeting, when it comes to cost management, when it comes to preparation of financial management reports. If you want to keep track of your expenses, you want to keep track of your invoices, you want to keep track of even your inventory levels, zero accounting software is very robust on that area. And it's not the only application. There are many applications out there that you can look out for, so that you are able to be very efficient on how you handle your affairs as a business. And adopting technology is very important, because even as you scale up, technology will be a salient factor in doing so. Sometimes we may want to nurture a culture of cost consciousness within the organization. Maybe part of our team, they may not understand why we are saying we do not need this commodity. We need this other one, which is cheaper than the other one. They may not understand why. So we need to inculcate a culture of cost consciousness within our small businesses, whether we are operating as a family-owned business, or whether maybe we have scaled it up, we have employed a few other employees. We need to pass that culture of being conscious about cost reduction, cost management, and also continuous improvement, slowly through proper communication and leadership. And finally, in this era whereby we are facing several cybersecurity risks, we want to implement a very robust cybersecurity mechanism on how to keep our businesses safe. Our information about our organization, the clients we are dealing with, is it at risk from being hacked or being accessed by other malicious people out there? So we may want to implement a very robust mechanism on how we are going to keep our businesses ahead of the curve. And just to sum it up, we have one practical example of an SME. Peter used to run a very successful business of baking and delivering cakes in Isinya town and its environs. And he had his sights set on expanding this business and was setting up a modern kitchen, a modern one, to improve and expand his service. And due to his lack of good credit, due to his lack of his good credit worthiness, maybe he didn't have a good relationship with a financing organization, he could not get a loan from a bank. However, he managed to get a loan from a non-deposit taking microfinance institution, and he used his delivery van's logbook as collateral for his loan. Sadly, after a few months, he was short of cash and the microfinance institution refused to restructure the loan and he had to lose his bank. Now, his business is in jeopardy as he has to pay motorcycle riders to do his deliveries daily. And the loan repayment plus the extra delivery cost have eaten into his profits and he's now barely making ends meet. Now, based on what we have discussed from the previous slides, I want members maybe to confirm through the chat section, what could Peter have done better based on our discussion today? What could Peter have done better to make sure that at least he couldn't have faced these challenges? I'll be looking at the comments to see if members they are able to find some answers to that. Frida, maybe you can take it over from there before
Hello, John.
yeah. Yes.
Maybe you can project the question once more so that members
Okay.
can look at it even as they
Perfect.
respond.
Perfect.
Then the room is open for any questions that might have arisen from the presentation. So feel free to chat in the chat box, or you can unmute and ask your question.
Members, I know we've been part of this discussion. A small question there that needs our input. What could Peter have done better to ensure that he didn't end up in the problems that he has found himself in currently? Thank you, Julius Maumo. I see your comment. Peter could have established a good relationship with a bank, which would have accepted his logbook as security. Perfect. We discussed about establishing a very good relationship with the financial institution so that when that rainy day comes, they save the day. They save the day. So thank you for that comment. Thank you, Patrick. I can see your comment. Peter should have built some good relationship with the SACCO that he can access loans at low interest rates. That is perfectly in order. So we are seeing that building relationship with a SACCO, a bank, is very critical because as a business, you will always need that cash. And sometimes you don't know when you'll need that cash. So you need to develop that relationship early in time. Thank you, Jefferson Chola. I can see you. Yes, you will receive the slides for further internalization. Thank you. Do we have more comments before I conclude? Okay, thank you. Thank you. And just like our friends Jefferson and Julius, as well as Patrick, have quipped, Peter should have developed a very good relationship with a bank or a SACCO so that he builds credit worthiness, which can help him obtain a loan, a very friendly loan. He could also have explored other financing alternatives besides attaching his van to get the loan. He could have explored other available options, maybe. Sometimes it's good also to carefully consider loan terms because some loan terms they are very material, but sometimes we overlook them. When we are given a form to fill for a certain loan, sometimes we may not take interest into reading the terms, and they may end up being the devil may be in those details. So it's good also to consider the loan terms. Like we have seen also, Peter would have maybe during the initial phase and as the business was picking pace, diversified the income streams. Maybe he could have explored other alternatives of making some small investment somewhere so that when a rainy day comes to his bakery business, he can have some other revenue stream that can help him plug in the gap in terms of finances. Sometimes when you find yourself in such a space, it's also good to consider in negotiating for a loan restructuring with the financing institution. Although sometimes, based on the terms that we have just talked about, they may decline to restructure like it is his case here, but it's also a very good option to make sure that you negotiate for a restructuring of your loan so that it gives you ample time to reorganize yourself and have a better plan on how to pay back the loan. Thank you, Sheila Luther. I can see your comment. Yes, you are saying, but he still would have run into the same situation. If his books were not properly kept, his car could have been repossessed. I agree with you. I agree with you. Only that maybe when he was doing the financial planning for his small business, for his small bakery, maybe those are part of the risks that he would have identified and had some proper strategy of how to handle them when they come. And part of what maybe he could have done is what our colleagues here have discussed, maybe having a very good relationship with a SACCO, for example. I believe some SACCOs can lend you some cash without attaching your vehicle, maybe without using your vehicle or an asset as a collateral, maybe based on your savings, based on your credit worthiness. Maybe we are saying he could have maybe had better plans earlier on time so that when such a day comes, he'll not be short of options like he was in this case. And thank you so much, Sheila, for that comment. So having said that, I think we are now good to look at the key takeaways that we have observed today, including the need to understand the financial needs and priorities of your business, managing cash flows effectively, because that means you are able to keep your business stable and sustainable over the short term and even in the long term. It's also important, like we have seen the case about Peter, to explore other appropriate financing and investment opportunities. They may save the day when that rainy day comes. Also, it's important to keep tabs with how you comply with the different regulatory and tax requirements. It's very essential because sometimes when you don't do that, and right now we know maybe KRA is making efforts to net all the taxpayers. Maybe when they want justification on why you declare this much and not maybe this particular amount, you may want to have some very good records to support or to justify the amount that you have declared. It's also important, like we have seen, to seek external support where you face knowledge gaps. It can be financial, it can be on any other areas, a small business. It's good to seek support from advisors, consultants. If it's on accounting matters or financial matters, you can deal with accountants or financial experts so that they are able to guide you on how to comply and how to make your business operations to run smoothly. Embracing technology, we have seen we cannot overstate that. And finally, it's important, even as we look to scale up our business, it's important to monitor how we are progressing, and we can readjust maybe based on what we had planned, even as we seek continuous improvement on different areas that we have identified that need our action. So I think we have come to an end, maybe unless if any of the delegates here have questions. Frida, would you please take over from there?
Thank you very much, John, for that wonderful presentation. I'm hoping the attendees gained quite a lot. I can't see any question in the chat box. As we wait for people to do that, I can project. Kindly, John, allow me to share my screen. So welcome to John Daniel and Partners LLP. We are a zero partner and certified advisors. We normally hold monthly webinars to empower SMEs. We believe in teamwork, integrity, and excellence. We empower you to run your business, and our inspiration is to see you succeed as SMEs. The services that we offer include bookkeeping and accounting. We also do internal and external audits. We offer tax advisory and management advisory services. Our team is made up of CPA finalists who have undergone both local and international training. And also they are zero certified advisors. They are passionate about business and consulting. And then our key practitioners are Dan Chege and John Guri. Some of our clients that we have worked with include Marifa Homes, EcoPrime. Those are in the real estate industry. We have PVCC Consulting in the pharmaceutical world. Then we have Bata in the manufacturing industry. We have Wolf McDonald in the wealth management industry. We also serve some auditing firm, Libra, and then a Rotary Club of Nabo, and then our Wemamelon Mission, and then Roots Kenya, which is an NGO. And then we have also done some business with the government. Our key partners are Zero, and then also we partner with WorkPay. So what's next? In our business approach, we would like to understand our customers' needs. Then we contract, and then we plan and deliver. Then they discuss and consult with you. We conclude and develop a viable relationship with our customers. So thank you very much for your time and attending this webinar. The slides will be shared in your emails, and we are looking forward to having you in our next webinar.
Frida, before you log out,
Yes, John.
I see a comment from Ahosi Kobonyo, which is very on point. I think it's something that we tackled about considering cheaper options when you are stuck and you need cash to plug in some gaps in your finances. It's always very advisable to look for the most cheap alternative. And so Ahosi is saying maybe Peter could have considered taking a loan from a friend or a family, or even selling part of the business to make it a partnership, which is very true. Asante sana Ahosi for that comment.
Thank you, John. And thank you, members, for attending today's webinar. I can't see any question raised, so feel free to exit. Asanteni sana. Sheila says this was an insightful session. Thank you, Sheila. And Elsie says thank you. Miriam asks whether we have WhatsApp. Miriam, you can reach us directly through the number that is projected on the screen. You can chat us via WhatsApp. That is 0722 817 818. But you can reach us directly or via email or visit our offices in Komodo Office Suites, that is in Kilimani, Kindaruma Road, Wood Avenue Junction. Yes. Patrick says, thank you for the lessons. Thank you so much for joining, Patrick.
This is brought to you by John Daniel and Partners LLP.